Hey friends, Lucian here with the Bullish Bears team. Wanted to make this video on the Bullish Harami pattern. We like to use this helpful resource of Investopedia.com. They're really good at showing definitions and kind of simply explaining things. So I'm going to read the definition and then show you several examples. So the Bullish Harami is a candlestick chart pattern in which a large candlestick is followed by a smaller candlestick whose body is located within the vertical range of the larger body. The bullish Harami is a downtrend or bearish candlestick, red engulfing, with a small bullish candlestick, green, giving a sign of a reversal of the downtrend. Since the bullish Harami indicates the bearish trend may be reversing, it may be a good time to enter a long position. So, I'm also going to show you this as well. Harami in Japanese, if you look down here, means pregnant. So it's pretty cool. It's actually a good visual. Like if you forget the name of it, just thinking of the word pregnant gives you a better visual, right? So I'm going to show you several examples. And again, you'll see kind of right here, big red candlestick, small green candlestick. So it's kind of like, I don't want to say this is a woman in her belly, but if you look at a visual here, it could be up higher, it could be lower. So don't be like, okay, Harami means pregnant, so it's got to be like right in the center of the candlestick. No, the green candlestick could be up higher or lower, but this is really like a perfect looking Harami or bullish Harami pattern. As you can see, price is falling, big red candlestick, smaller green candlestick. Now, you're not always 100% going to get a reversal. Sometimes, patterns fail. Many times patterns fail, but this is a really great looking sign of a potential reversal, and it did. It went up. Again, when it goes up, doesn't mean it's always going to stay up. It could go up, trade sideways. It could go up a couple days or a day or two and then fail. But this is a really great looking bullish Harami pattern. So I'm going to show you several other examples as well. Let's take a look at AAL. As you can see here, this is American Airlines. Another bullish Harami pattern. You can see the candlestick, the little green one, is a little bit higher, not down as far. It's still engulfed into this bigger red candlestick. So as you can see, price was falling. Again, remember, very important to look at these other indicators and why these candlestick patterns do what they do. Many of times these candlestick patterns happen when a stock is overbought, oversold, or right at moving average lines. Very, very important to note that so that when you're looking at the overall big picture, look at these candlesticks, drill it down to one, so find, is it a bullish or bearish one? Is it a 2 or 3 pattern kind of candlestick pattern, and is it then forming in a larger type of pattern? So like if you have a bullish Harami, is the bullish Harami forming as part of a bigger bull flag or bear flag or cup and handle or head and shoulders? You got to look at the bigger picture and kind of drill it down, right? So as you can see here, very simple. This price is falling. Look, very oversold, right? At some point when a stock gets overbought or oversold, it wants to gravitate back to these moving average lines. It's just a matter of when. At some point, typically it will. Nothing stays down necessarily forever unless something's complete garbage. But if it's a typical decent stock, it's going to want to gravitate back to the moving average line. So as you can see here, oversold, kind of falling down here, bullish Harami, and this was a reversal, right? So further away, then you got to be careful of overhead resistance at the moving average lines. And this one obviously continued up further. HCP. Here's another bullish Harami pattern. Prices, so bear flagging here. Got some, kind of all these different indecision candles over here. Big red candlestick. Look at this. Price is oversold, right? Bullish Harami, right? Remember that kind of pregnant, a belly kind of here within a body right here? That's a really nice, good looking bullish engulfing pattern. But look at this. It went up and only for a couple days, 2, 3 days or so, right? Rejected off the moving average lines and fell down. So it is a reversal. It did reverse, stop. It went up for a few days, but then it fell back down. So again, what goes up, just because it's a reversal doesn't mean it's going to completely change the trend. You got to look at all the other indicators as well. Candlesticks, moving average lines, other indicators, and kind of put that whole big picture together. Let's take a look at BAX, BAX. So this one over here was moving up. And then it had it, it fell, right? So it fell, started falling, failing the moving average lines, big red candlestick. So as you can see here, doesn't always happen when it's overbought or oversold. But remember what I was saying, many times it'll happen at moving average lines. So you can see a failure of the blue line, which is the 9 EMA, and the red line, which is the 20 EMA. Big red candlestick. It was heading towards that purple line, which is the 50 SMA. And here you go. Buyers came back in right here, saved it from touching down at the 50 SMA. And look, reversal. So, it's kind of forming that bear flag here. So flag pulled down, bear flag up, kind of had that doji candlestick here, rejected, came back down. Buyers kept it going here. And another kind of doji candlestick. So it's kind of like that bear flag or that wedge. Now you have almost like a triangle kind of pattern here. And no coincidence, right? It's happening right at these moving average lines. Very important. Traders are always aware of this. And as you can see, then price, once it finally closed back above that 9 EMA, it kind of, continued to move upwards. But again, watch these patterns, watch what they're doing if they're near moving average lines or if it's happening when a stock is overbought or oversold. Very important. Again, I like to use several real-world examples because repetition is always the key. And when you're looking at these patterns, you got to look at several of them, see how they, how they kind of mix up and not show necessarily completely perfect patterns all the time. So we'll look at several examples here. So you can see GM here was overbought over here, started to fall down. You can see bear flagging here. Big red candlestick down, right? Still in the center kind of RSI, so it's not oversold yet. Big red candlestick, small green one, Harami, bullish Harami, reversal pattern, right? You always say potential because you don't know what's going to happen over here, but if you just saw these two candles, that's a potential reversal sign. Now, very important, what's happening in this bigger picture? Look at this action is happening right at the 50 SMA. No coincidence that this is happening. The bears are trying to push it below the 50 SMA. The bulls are trying to push it back up. Bulls won on this reversal. And as you can see, it was a reversal pattern. Let's take a look at Apple. Again, Apple, is fading. You had some bear flags here going on. Big red candlestick here. And you can see this candlestick happen right here. Oversold. So it was oversold. Look at this red candlestick. What did it do? Bounced off that 200 SMA. Bulls kind of pushed it back up. Then you kind of have this small green candlestick right here. Bullish Harami right here for reversal. And look, it went back up, right? So be aware, just like these other indicators, just looking at the big picture. And it tells again, when you're looking at overbought, oversold, and moving average lines, very important. So here's a perfect example of one with X that I'd like to show you something that it doesn't always do what you want or think that it's going to do. So, perfect example, overbought over here, right? Really up here on X, right here, boom, 3 red candlesticks down, right? Big red candlestick, look at this one. Small green candlestick, right? Let me zoom in here a little bit. Small green candlestick within a big red one, doji candlestick. Smaller kind of real body. So this could be a bullish Harami, right? Look at this, right at the 20 EMA. So now it's falling, kind of holding at the 20 EMA. But look what happens. After that, it failed, right? So it didn't just go back up. You had a big red candlestick down and then another green one down. So it actually fell further. So here's a perfect example of where you can say, oh, okay, this is reversing. I might go bullish on it. Well, hold on, not so fast because it failed here. For a couple of candlesticks, 2 or 3, before it then went back up. Then you had this indecision, kind of went back down. So this could be a rope-a-dope. This could really play with your emotions if you're not careful. So this is, again, where we want to show you not perfection, where it doesn't just mean the stock's going to go up or reverse the direction you think just because you get a signal. Always got to be aware of the other indicators and what's happening. Let's take a look at MDT, another one here. falling, right? Big red candlestick. Let's zoom in a little bit. Bullish Harami, green candlestick came back in. It did reverse, went back up. Look at EMA's overhead resistance, rejected, boom, fell back down. So sometimes you only get a short pop. Doesn't mean it's going to go back up forever. So you can see bullish Harami turned into a bear flag, right? Rejected at the EMAs and boom, failed. Look at these patterns within the pattern. So don't be like, hey, I'm going to go really long on MDT when you see a pattern like this, because you have lots of overhead resistance it's got to go through. So these two candlestick patterns can form into a bigger pattern. So this bullish Harami became a part of a bearish pattern, because you can see bear flag, and here you go, the flag. So you can get the flag on a bear flag as part of the bullish Harami. Right? So that's why it's very important to look at the patterns within the overall pattern.
If you're not a member of our community yet on Facebook, come and join us. We are the Bullish Bears. You will see right up here, we call ourselves the stock market community, just to differentiate ourselves from our fan page over here. So make sure to like and follow our fan page, as well as join our Facebook group. You will notice when you join our community, we keep all the spammers, the trolls, and the stock pumpers out. So we run a really good, clean Facebook group. So if you want to join a community of other traders around the world, make sure to come and join us. Also, too, if you have not been over to our website, head over to bullishbears.com. You'll have the links below. And you'll see over on our website, we'll have several different trade rooms over here. We have a day trade room. We have a swing trade room, a futures trade room, other great areas of support. So not only do we have our Facebook community, we also have our trade rooms that are open 24/7. So you can talk to traders from around the world anytime, day or night. And it's a really helpful resource, especially if you're new and just getting started in the stock market. It's nice to have other traders around the world as support. So we have our several different trade rooms, our Facebook group. We also do watch lists and trade alert setups every night. We send out key breakout and breakdown areas on our alert service each night. We are not stock pumpers. We do not call out entries and exits. We help to teach you to become your own trader. So again, we help to guide you, but we're not calling entries and exits because we are not stock pumpers. So make sure you read about our alert service over here if you want to know how our trade alerts work. We do also have thousands of dollars worth of free courses over here to help you get started. So if you're new, give yourself a few months to get comfortable with trading. You know, it takes many traders, a few months, if not a year plus, before they get really comfortable. And that's why we suggest taking our free courses and then practice in a virtual account like Thinkorswim or Interactive Brokers to really get comfortable. Make a few hundred practice trades, practice in our trade rooms, talk to other traders around the world, and just get yourself comfortable with trading. And then when you're really comfortable, then start trading with real money. You'll see right here, we also have our ebook, so make sure to grab that. We have a free Candlesticks ebook, as well as our wallpaper backgrounds as well. So we offer so much value to our community members. So if you are not a member yet, make sure to just click the subscribe button over here, and you can come and join our community. And also don't forget, if you like this video, make sure to like it, comment on it, and share it. We would greatly appreciate it. And we will see you in our community. Enjoy.